Hello from Moted Markets, this is Ahura, and we'll be with you to review the central bank's meetings in this week. This week, as we talked about the weekly update, it's going to be the week of the central banks. So far, we had the Japanese Central Bank or BOJ meeting earlier today. Later today, we're going to have the result of the Federal Reserve meeting. Tomorrow, we're going to have the BOE meeting or Bank of England, and later also on Thursday, we're going to have the central bank's meeting in South Africa, and on Friday, we're going to have the central bank meeting in Russia. Let's start with the Japanese central bank. BOJ held its meeting earlier today. They kept the interest rate unchanged at 0.5%. It was well expected. But the thing is that the central bank in the announcement mentioned that underlying inflation is increasing and they are expecting higher inflation later this year in the mid-year. So that increased the scenario of more rate hike this year. Generally, we are expecting for now to see the central bank in Japan to increase the rates by 225 basis points from to the current rate, and we have the interest rate later end of this year at 1%. We know that labor wages increased in the previous weeks, and now the labor union, they agreed with the government about the new wages. At the same time, the inflation increased to 4% in January. So generally, the condition, economic growth was fine. We saw that the imports increased very well compared to previous one. Even thought it was a little bit lower than expectation, but generally the exports improved very well. Generally, we can say that economic condition is fine in Japan. Inflation slowly increasing, wages increase, so they're bringing the inflation more in the focus, the risk of inflation. That's why the central bank right now has more reason to increase the rates in next meeting. So that's why we are expecting more hawkish central bank in Japan or BOJ. That caused it helped the Bank of Japanese yen to increase a little bit against its process. But now, if you see the slight uptrend in the USD JPY, it's because of mostly the power of the US dollar index. You know that the US dollar index earlier today from 102.90 increased about 103.40. That's made the USD JPY that put a little bit pressure on Japanese yen, and USD JPY have slight uptrend. Even thought this if we didn't have this decision earlier today and the central bank had it was a little bit less hawkish, we could see more pressure on Japanese yen against US dollar, and maybe USD JPY could drop to 152 or 53. But right now, because of this decision in Japanese central bank, we can say that the yen got slightly its feet stronger. So now it's slightly stronger, but despite the increasing US dollar index, USD JPY somehow we can say this is smooth and natural, slightly lost the ground to the against US dollar, but against pound, against yen, against yuan, against euro, the Japanese yen is getting stronger. Generally, this decision was fine and positive for Japanese yen and put some slightly pressuring Japanese stock market. On the other hand, later today in the United States, actually, we can say that later today, we're going to have the final results of 2 days meeting of central bank in the United States. Federal Reserve will publish its announcement, and also after that, we will have the dot plots, and later we will have in 30 minutes later we will have Mr. Powell's press conference. What we should expect, the central banks is expecting to hold the rates at 4.5%. This is widely expected, and we don't have somehow the market is counting more than actually pricing more than 99% on not on holding the current rate. So there's a more than 99% chance for holding the current rate. That's why we can say that somehow there is no reason to see the rate cut this meeting. But the thing is that right now the market mostly pricing in two more rate cuts by year end. So which means that at the end of 2025, we should see the inflation interest rate at 3.75%. Or average of 3.9%. If we see this number higher or lower, it means that the higher, if it's higher, more than 3.9%, means that Federal Reserve is going to be more hawkish, which is very less likely. The thing is that right now, despite according to the slower economic growth and the lower expectation for the economic growth because of the trade war, the market somehow counting on a lower GDP, which means the central bank should cut the rates more to support the economy. So if we see these numbers, 3.9 and 3.4% for this year and next year for 2025 by end of this year and by first quarter of this 2026 or the first quarter of 2027, if these numbers change, then we can say that okay, it is, I mean, if it comes lower, 3.9 is become to 3.8 or 3.4 become to 3.3, which is expected to be happen. That means that the central bank is getting more dovish, which is negative for US dollar and positive for the stock market. So all what's happening in markets is depend on this market projection. And also we should on the dot plot, you should check the not just interest rate expectation, you should check the inflation expectations and unemployment rate and GDP expectation rates, GDP growth expectations as well. But mostly market will focus on interest rate expectation or projections for the 1 year, 2 years, and long term. So this is what's going to happen here. What we are expecting to see is that the central bank do not mention on the projection. We don't expect to see any changes in this number generally, which means for now that could be somehow a little bit more hawkish tone in the statement and the dot plots. So with this expectation, we can say that the US dollar index could hold its gain and slightly increase around 100 towards 104. Even not 104, but higher these levels towards 104. And generally, we're expecting a positive reaction from dollar index, which means that stock market with this decision will get slightly under pressure. So after some correction that we had earlier this week till now, we can say that after this meeting, we should expect some pressure on the stock market. But if the markets bring this 3.9 and 3.4% for next year and 2 years later, inflation, the interest rate expectation lower to 3.8, 3.7, and then 3.4 down to 3.3 or 3.2 for 1 year and 2 year expectations, then we can expect the stock market to get a little bit encouraged from this decision and increase. So all depends on the dot plots and what Mr. Powell will say in press conference, but the dot plots will be much more important. And next day, on Thursday, tomorrow, we're going to have the BOE meeting. In the United Kingdom, we know that recently we had more weakness economic data. Right now, the unemployment rate increased to around 4.4%. Generally, economy is under pressure. Even thought the inflation, which was increasing to January and February, slightly decreased and slower, but still way lower than the central bank target. That's why we expect at the same time, we know that the new government's policies, they are somehow the inflationary. So with this expectation, we can say that the central bank can hold the interest rate at 4.5% unchanged. So our expectations for inflation is 4.5%, 2 votes for cutting the rate and 7 votes for holding the current rate. Whatever the market reaction will depend directly on these numbers. If the numbers doesn't change, it means that we can say that the pound could hold somehow its gain. But if we see more votes for rate cut, for example, if that come to this 2 become 3 or 4, 4 is less likely, but 3 is likely. Then in this case, we can say that the British pound could get slightly under pressure against US dollar index. Let me bring the chart. In this case, in this case, if the number two, I mean the in expectation calendar, or the number of the votes for cutting the rates from two to increase to three, then we can say that USD GBP USD could get slightly under pressure with 1.28 targets. But if not, GBP USD can hold its gain, especially about 1.25 and 1.27. We can say that for now, side movement with uptrend tendency is more likely. But still, generally the pound could be positive or the negative. Pound against US dollar is dependent also on the Federal Reserve meeting as well. After the Federal Reserve and BOE, the less important but still the important meetings would be in South Africa. We know that the South African Central Bank, or Reserve Bank of South Africa, is expecting to hold the rate at 7.5%. And next day in Russia, Central Bank of Russia, or CBR, also supposed to hold the rate at 21%. These two data should be positive for ZAR and Russian ruble. This is generally the central bank's meetings for today, tomorrow, and the day after on Friday, and market expectations. If you had any other question, don't forget to write in the comment section. I will try to get back to you as soon as possible. We will try to have more videos next days, but if not, this is our general expectation. Have a good day. Bye-bye.